Hey, welcome back to my channel. This is LR Options here. If you're new to my channel, please don't forget to subscribe. If you're returning, welcome back. Um, Today we're going to be going over how multiple time frames affect how you look at a stock, how you trade a stock. So beginners should learn and take advantage of how multiple time frames will affect their entries going into a stock. And I also like to take a look at the news and what the news was doing at the time that that the markets were on. I'm looking at the time frame of March the 2nd to March the 6th. And at that time, there was growing concern over people coming together in public events. Airlines were beginning to waive their cancellation fees, and people were advised to keep 6 feet distance from each other. Concern is growing over enough medical supplies and personal protective equipment such as masks, shields, lab coats. So we're going to be looking at how using multiple time frames can give you more information as to what is happening within a stock. Time frame is simply the trading activity that you see within a stock at a certain time. For example, a 30-minute time frame will show you where the stock is moving every 30 minutes. A smaller time frame, such as a 5-minute time frame, will show you a candlestick for every move the stock has made in those 5 minutes, whether it's gone up, whether it's gone down, or whether it stayed flat. Usually a smaller time frame is used when day trading, because quicker decisions have to be made. You want to go into the stock early, you want to come out early. So you want to go in and out of that stock the same day. You want to enter the stock, you want to open it, and you want to close it the same day. And that's usually done in day trading. A larger time frame is usually used for swing trading, when one trade will be held overnight to a few days or even a few weeks. Okay, so let's take a look at a few stocks, and we're going to look at them at different time frames. So let's look at what was happening March the 2nd with American Airlines to March the 6th. And over here, March the 2nd, it opened at 1892 approximately. It closed at 1879. And as you can see, the stock basically was moving down, was falling. The second day of the week, again, it opened with a red candle, a large red candle. That's very symbolic of which direction usually which direction the market's going to go. So the stock went down. Okay. Again, let me choose the arrow cursor. That's better for me. Okay, again, March the 4th, American Airlines fell, and it fell all the way down to March the 6th. Now, we're looking at the 30-minute time frame. So every candle you see here symbolizes 30 minutes. So this is the 9:30, the opening of the stock market. This candle then would be, the smaller red candle would be 10 o'clock. The green one would be 10:30, and so on. And it continues into 30-minute increments until the market closes. So let's go look at let's look at Bank of America. Okay, we're looking at March the 2nd. Again, it didn't move much the first day of that week of March the 2nd. But it did start to fall on the second day of the week. So on the second trading day for that week, it started to fall. And it fell from 29.11. And it went all the way down to 25.49, approximately. So it fell about 3.5 points. So basically, the market, it was doing, especially the airlines, because they were beginning to wave because of what's going on nationally, worldly. They were beginning to waive the airline fares, cancellation fees, airline cancellation fees. I guess everyone was getting to get an idea of what was going to be happening. So it shows in the stock market. Okay, let's go to JP Morgan. JP Morgan is the same thing. It opened on the 2nd of March, 115.26, and it closed on 106.71. Okay, so it fell quite a few points. Let's see, let's also look at Morgan Stanley. Same thing, March the 2nd. The stock opened at 44.97 and it fell to 41.67. Okay, let's look at Exxon Mobil Corporation. Okay, it also fell March the 2nd and to 47.48. Actually no. Yes. 47.48, March the 6th. Alright, so let's see if we can see some patterns here. Let's go back to American Airlines. And let's look and see. Actually, let's look at the time frames, because that's what we're here for anyway. The 30-minute time frame, we saw what it looked like, 30-minute increments. And you see the information that you get. Let's go look at 5-minute increments. And let's go to March the 2nd for American Airlines. Okay, I'm gonna have to, let's go this way. Okay, March the 2nd. Oh, okay, we're almost there. March the 2nd. Okay, just have to fix my graph. All right. And we're almost there. Okay, March the 2nd, which would be Monday. So you see, you get quite a bit more information of what's going on in the stock movement. So you get a little bit more detail. So the stock opened with a large red bar at 1901 on Monday, March the 2nd, American Airlines, and it fell the first 10 minutes to 1793. So it went from 1903 to 1793. Okay, then we had a green bar, and as you see, the moving indicators are above us, above the stock. So, which usually symbolizes the stock is going to be going further down. So the moving indicators are trending down. You see the 200 moving indicator, the 50 moving indicator, the 20 simple moving average, and you've got the 9 moving simple moving average. Okay, so then the stock moved up a little, and usually what I notice is that in a falling stock, if you see a certain amount of green candles going up, you're bound to see the stock coming back down. So but to me, it's more noticeable in the 30-minute time frame. So if we go back to the 30-minute time frame, let's look at March the 2nd. Okay. So over here, you've got the stock moves up a little. And again, trending indicators are moving down. You see the 50-minute indicator, the 15 simple moving average indicator, and the 20 simple moving average indicator going down. And you see the stock going up against the trend that the indicators are showing you. And then you'll see the stock moving. The first red bar, it'll go down a little. Okay, again, you'll see some movement here, those green candles, and then you see the stock coming down. So you see the stock coming down this way. And that's what I usually notice. Again, going up, and then you see that the stock goes down. It pulls up a little against the trend, and then it continues to come down, and then it just continues to do that a little bit longer. Again, up a little, and again the stock goes down. Okay, that's a 30-minute time frame. So let's go to the 15-minute time frame, and we're going to go again to, going to look for the March the 2nd. Okay, there we go. And let's look at the 3rd day in March. And you see a lot more detail, and you see how the stock, most of the bars are usually in alliance with the way that the indicators are moving. So if the SMA indicators are moving down, most of the bars you see will be red. Okay, and you'll see some slight pullbacks, and they'll be green. And then again, the stock will start to move again down. So you've got the indicators going that way, and the stock usually goes the same way. Okay, here we see large green bars going up. Well, large relative to the red bars, and then a continuation of the stock going down. Okay, let's look at Bank of America in a 15-minute time frame. Okay, let's look for March the 2nd and the 3rd. Let's look for the week of March the 2nd. Okay. Again, let me whiten up the screen. Okay. Same thing. A lot more detail. You get a lot more activity, a lot more movement with a 15-minute time frame. So every 15 minutes, you're going to see a new candle appear. that candle can be going up, it can be going down, or it could just remain flat. It can gap also. It can gap up, it can gap down. It can move far away from the previous stock. It can move far away from the up from the previous stock. It can gap far below the previous stock, candle. I'm sorry, candle. Again, you have Bank of America. You have 3 candles doing a pullback, going against the movement of the stock, and the movement of the stock is going down. Okay, and then the stock continues. First red candle that shows up brings the stock back down, and in unison with the indicators. Okay, and then we're going to go into let's put all of these days together so we can see this more clear. If we were to draw the line from the second, right from the stock open to the second to when the stock closed, let's move that a little bit more. You'll definitely see that the stock moved down. And again, it trended down and it moved down. And again, everything ties into what's going on. Not everything, but usually things that tie into what's going on with the news. It's good to listen to the news, especially if you're a beginner, because it gives you an idea what stocks will be doing. It's good to use the simple moving average indicators and the multiple time frames. You can choose 15 minutes. You can choose 5 minutes. In 5 minutes, you'll see you get a lot more detail. You see that you'll get a candle for every 5 minutes. To me, that's a lot more confusing because it might trick you into believing that you're going the wrong way. Your stock is going the wrong way. It's getting away from you. You have to close it. You're losing money. When in reality, if you change the time frame to, let's say, 2 hours, especially if you're swing trading, because let's say you're not closing this until the next day or a few days ahead, you want to hold on to it for a while, you'll see that you actually may be on point and your stock is not getting away from you. So over here we're looking at the 2-hour time frame for the stock of Bank of America, and let's head on over to March the 2nd. Here we are, and same thing. You see the simple moving average indicators are way above. They're trending down, they're moving down, so they're showing you the same thing that your 30-minute indicator was showing you and your 15-minute indicator was showing you. So something like this, if you have confirmation on several time frames, then you're okay. You should be okay. You're right on the ball. If you see that your indicators are showing you something different, when you change your multiple time frames, you change different time frames to take a different look at your stocks, and you see that things change, well, maybe you're not heading in the right direction. Okay, so anyway, we're going to end this here. Thank you for visiting my channel. Please comment, share, subscribe if you haven't already, and let everyone know what we're doing here at LR Options. Thank you. Bye-bye.